Hi and welcome back to another video. In this video we're going to be analysing NVIDIA. They are the leading GPU manufacturer in the world and have a fast growing computer networking business also that includes data center platforms and high performance computing. NVIDIA has been requested a few times on the channel but also on our Discord and Patreon, so that's why we are doing it today. The stock has been on a crazy ride for the past 5 years, with investors who held NVIDIA locking in a 1,500% gain. Regardless of the steep move up, a lot of people still believe NVIDIA has room to outperform, and we will find out in this video if that is the case and put a price target on NVIDIA based off of my required rate of return. So our analysis on NVIDIA today will include trying our best to understand the business and why it's so special, analysing its potential for growth in the years ahead, and ideally put a number on that growth if we can, checking the financial health of the business and assessing its most recent acquisition of ARM. And as usual, we will do our best to put this into a realistic valuation model and estimate a fair value to buy NVIDIA stock today. So firstly, let's discuss the business model, which I've already touched on slightly, but NVIDIA are a graphics processing chip manufacturer that currently generates most of its revenues from the sales of GPUs, which are used for things such as competitive gaming, professional visualization, and cryptocurrency mining. They also provide parallel processing capabilities to allow customers like researchers and scientists to efficiently run very high performance applications. They are deployed in supercomputing sites around the world by way of their NVIDIA accelerated computing platform. In my opinion, NVIDIA has gone past the point of just being a disruptive business, although it still is technically a disruptor by way of constant innovation, but it's one of the leaders in its field now. It's a special business and has a unique way of doing things. They are habitual in finding what they're good at and ensuring it helps progress the world or the markets that they are in, and they spend their time working very hard on these complicated issues that also happen to bring a very good financial return when a tangible product is created. One big part of NVIDIA's success and future success, in my opinion, is their CEO Jensen Huang, who founded the company in 1993 and has led the company ever since. He's got a whopping net worth of almost 12 billion and is pretty much all in NVIDIA stock. We've spoke about it before on this channel, but it's always a massive bonus when you have an owner-operator at the helm and he has massive skin in the game. It's also an even bigger bonus if this person is a proven success like Jensen is. Now I'd like to analyse the growth prospects for NVIDIA. Keep in mind though, I am not a GPU or semiconductor specialist by any stretch of the imagination, nor do I claim to be, but you would be silly not to think that NVIDIA is at the centre of vast growth in various new and existing markets. I want to walk you through 3 examples here that I think demonstrate this. First example is NVIDIA's AI chips that will be used in supercomputers and driverless cars. NVIDIA will be supplying the chip that acts as the brain or computer for the newest Neo electric sedan vehicle. Another example that suggests impressive growth is Amazon using NVIDIA for their new project to develop an AI-driven cloud platform for big businesses through AWS. Amazon are already a big customer of NVIDIA's, with NVIDIA providing them with their data center chips for AWS currently. And lastly, NVIDIA announced in February that they are making new chips that will be used for mining Ethereum, the world's second largest cryptocurrency. And even just picking out these 3 names that we've just mentioned, so we've got Neo, Amazon AWS, and cryptocurrency or Ethereum, 3 names that have growth just associated with them. I think these 3 aspects really hint towards how much growth NVIDIA could see in the next sort of 5 to 10 years. And this is without even touching on their new GeForce gaming GPUs and cloud gaming business altogether that has over 10 million users and is rapidly accelerating. On a broader basis though, the semiconductor market has seen weaknesses, with chips not being in such hot demand, which has led to a global shortage. And NVIDIA is a fabless chip company, which means that they contract with foundries or chip makers to make the chips that they design. Other chip companies such as Intel actually own their fabrication plants and manufacture the chips themselves. So amid the global chip shortage, it should take more than a few months or maybe even more for the supply of NVIDIA's GPUs to actually catch up with demand, which could be an issue for the short term if you're looking at the next quarter's results or the next 3 quarters and things like that. But if we're looking at the medium to long term, it's not a huge concern. Actually, a very good indicator that there's such high demand for NVIDIA's products. So in light of this, some industry experts advise investing in chip companies that serve the highest growth end markets. And NVIDIA taps such markets, as we've covered, including AI, self-driving cars, data centers, gaming, and cryptocurrencies, all very high growth secular trends going into the future. So the point I'm making here is growth shouldn't be, and in my opinion, isn't an issue. Lastly, before we get into our valuation, I want to quickly cover NVIDIA's $40 billion acquisition of UK firm ARM, which is set to complement NVIDIA's AI and data-centric capabilities. And the acquisition is still awaiting approval and has come under some scrutiny, especially with the UK and EU anti-monopoly investigators and regulators who are looking into the deal and whether it can be approved. It seems as though all the fuss has been made, though, or created from competitors and customers of ARM. And ARM is a complicated business, so we're not going to dive too deep into it, but it essentially develops and designs the architecture of processors and licenses its intellectual property to companies like Samsung, Qualcomm, and NVIDIA themselves. It doesn't actually manufacture everything, which is why it's such a great business with very impressive margins and just all-round great economics. So it will be a great addition to NVIDIA's business, at least in my opinion. Anyway, from what I've read, the $40 billion deal is looking like could potentially be doomed. You know, that's just from some articles I've read, but nobody knows for sure. So due to this, I'll be avoiding making any sweeping assumptions on the potential merged company, but may give a blanket scenario or at least some added scenarios that gives you an idea, or at least factor in some of what could happen from the potential merger. I will definitely be accounting for the dilution for current shareholders if the deal goes through, because it is a half stock deal. NVIDIA's financial health in the run-up to the acquisition is good, though. They have a very healthy balance sheet with current assets outweighing all total liabilities, which is very good to see, and a cash balance of almost $12 billion relative to $7 billion in total debt. And as I mentioned, NVIDIA will be issuing shares and then paying some cash to SoftBank, who are the owner of ARM, for the deal, which is meant to mean about 44 million shares of NVIDIA will be issued at closing of the deal to SoftBank, meaning almost 7% dilution to current shareholders. Now, if we get into the valuation, I'll be honest, as I outlined, NVIDIA serves a lot of high growth markets, but also has short-term headwinds such as the global chip shortage to go up against. So it's hard, for me to put a real definitive figure on what the company's growth will be in the next 5 years, especially given I'm not an expert in the industry and all of NVIDIA's complicated markets. But a couple of things I am fairly certain of. Firstly, NVIDIA will grow quite substantially as well. Second, NVIDIA will improve margins and economics will improve when new and high growth markets start to mature and at least develop, and their products will enter the mass markets from the development stage they're in now. Third, the semiconductor industry is cyclical, therefore growth and progression will not always be linear, probably almost certainly not be linear. However, we are forecasting it in a linear fashion just for the sake of valuations. I mean, the end result is all that matters though. Fourth, if the ARM deal goes through, NVIDIA will benefit from more revenue, and that's almost $2 billion today, and gross margins of 94% for ARM's business, and EBITDA margins of 35%, so really profitable business, meaning NVIDIA's cash earnings will see almost instantly a $650 million boost. They will also have a much larger total addressable market in the region of $250 billion, which they're setting themselves. With two of the strongest companies and most impressive companies you could want occupying it, really. I mean, that's a huge opportunity for them. So for the sake of screening, I have lent on some of the analysts' forecasts here. I mean, these are people who study the industry all the time. Of course, they will probably be wrong as well. No one's ever right on how quickly a company will grow. But I feel like we've got a good ballpark here. And what I've landed on is a 30% sales growth rate for the next 5 years, which is in the middle of various analyst projections that I saw. Some were leaning to 35% or higher and some estimating around 25% for a full 5-year period. Like I said, it is hard to tell because the growth's always not going to be linear because you have things like chip shortages and it is cyclical in terms of supply and demand. And they've managed 50% for the past 5 years, so they could well blow this out of the water. However, I've given them the added benefit, which I feel is an added benefit of margin expansion. mainly because of the ARM deal, but also because I feel like that margin will start to expand as they grow larger and they benefit from economies of scale, which gets them to 30% operating margin and a 32.5% free cash flow margin, which seems fair enough given the huge spend on R&D and new product development that they have at the moment, and that will some point come down at least relative to revenues once they grow. And I've included the share dilution for the ARM deal, which increases the shares outstanding by about 6.9%. And we have them staying flat from there on because at that point, in my opinion. For my terminal values, I've gone with an earnings multiple of 30 times, which I think reflects a good price to buy in 2025. You know, if these projections play out, it reflects a 0.75% 2025 expected PEG ratio. In other words, a cheap buy in 2025 if those forecasts can play out. And like I usually do, I'm showing a perpetual growth value as well, but not factoring it in. It's almost the same value, which is a good indicator. I'll show you what the difference makes in the end, but it's not much really. I've just got it there to indicate how close it is to our multiple. And with semiconductor valuations in the market being all over the place and relatively quite extreme, it's hard to conduct any relative analysis on other companies' valuations. But we can see based off my forecast, the multiple that you would be paying for NVIDIA today drops to around 18 times 2025 expected earnings from 75 times today, or 73 times today. Not cheap by any means, and I think everyone knows that. So based off these estimates, we get a price target for NVIDIA of $563 billion or $835 per share in 2025. Not today, it will reach that point in 2025, and essentially we can sell it for that if we want to exit the investment. And if we discount that and all the free cash flow back to today, we will theoretically receive, and I say theoretically because free cash flow is the cash left over in the business after all costs of doing business and maintenance expenses have been settled. It is ours as shareholders and can either be distributed by way of dividend, buyback, or ideally reinvested back into the business for a return, and then compounding can take place, which NVIDIA does. They don't distribute a dividend. They do small amounts of buybacks, but realistically it all goes back into the business. And we get a fair value based off of all of that for the stock today of $427 per share, or $288 billion if you're buying the whole company, which I don't suppose you are. If you are, I don't know why you're listening to me. Unfortunately, that does mean that NVIDIA is currently 15% overvalued based off of my required return of 15%. Now, that could change if your required return is a little bit lower, or maybe you just want to be part of the NVIDIA train. But for me, I want a 15% return, and unfortunately, that means it's slightly overvalued. Now, that's not to say that NVIDIA can't do better than these projections. They definitely can, but it's important to remember, even though this company has huge catalysts for growth, which you've been over, it is part of a cyclical and commodity-based industry that will undoubtedly run into some headwinds in the 5 years ahead. You only have to look back a couple of years to see that it's stagnated for about an 18-month period or 24-month period. So it does happen. And the stock has had a huge run-up in the past few years. So it could be that we get a chance to pick up this gem of a business for sub $420, which is our fair value if the market sells off. Ideally, I would like some margin of safety just because of my lack of knowledge around chip making and these complicated products that they have. So below or around $400 per share would be my desired entry point, if I'm being transparent with you. You can make your own mind up though and play around with the DCF model here to see what your buy price would be for NVIDIA stock. This, along with tons of other valuation models and much other benefits, will be available on our Patreon page and private Discord to view, edit, and copy yourself. So go and check that out if you're interested in supporting the channel. But that's all for this video, guys. I hope you enjoyed it. Let me know if you did in the comments, or even if you didn't and have some differing opinions. I'd welcome any feedback as always. Leave a like if you can. I'd greatly appreciate it, and subscribe to the channel if you haven't already. I will see you all in the next video. Good luck with all your investments.